So Intel stock is down almost 12.5% at the opening, and you can see that the market is not reacting that well to the last night's release of the earnings. And you can see that the revenue came in at 12.7 billion. This actually represents almost 10% increase compared to the same period last year. The gross margin in itself is not that bad. You have to remember that previously we've seen numbers that are much worse than this, I think below even 45%. So yeah, you couldn't argue that those numbers are that bad, but yeah, it could be better, especially if you compare to the two competitions in AI, which is AMD and NVIDIA. And due to their AI GPU sales, they are like increasing their margins substantially, especially in NVIDIA's case they are close to 65-75%. So there's room to improve for Intel here. So we can see that in the last earnings, so the one which was Q4 of last year, they mentioned that they're gonna divide the segmenting of the company's business segment in two different, updated mode, which they will separate the Intel Foundry, and so from now on you will be able to see the revenue that comes directly from the Foundry business, and then the client computing, data center, and network edge. And then on the last leg, it's basically Mobileye and the FPGA business, which is called Altera. So as we mentioned, 12.7 billion revenue for the entire company on the first quarter of this year. And this kind of is, it's not surprising that it's lower than Q4. Usually Q1 is less than Q4 in general in this market. But you can see that, compared to last year, sure, it's a bit of improvement, but yeah, I wouldn't think given that you have companies like NVIDIA, which are like going from really, really good place to even a better place, just even on a, let's say, yearly basis due to the AI demand. So Intel is not taking advantage of that. And we can see that if we look more into the detail, let's have a look at the segmentation. So starting with the first segment, which is Intel products. So this is a client and computing group. And actually this business is, let's say this segment is one of the ones that are fairly good. And I mentioned on the last earnings reaction that going forwards now, Intel is going to be in huge need that they really execute well on their, let's say, laptop business, their laptop CPUs and APUs. And the margin is going down. So Intel is not in a perfect position. They get some revenue, which is higher than last year, actually 30% higher than the same quarter last year. But you can see, although the margin is up compared to even that time, but you have to remember that in 2023 Q1, the consumer was so weak. So we are not comparing to good numbers. Like last year's numbers at this time were very bad. So yeah, it's better, but it's not perfect. But at least it's one of the segments that are doing, let's say, okay, not perfect, but they are doing okay at the moment. But the competition is heating up here, and you know that AMD's Zen 5 lineup, both on let's say laptop CPUs, but also more importantly laptop APUs, which is the CPU and GPU in combined package. So I definitely expect AMD to increase the competition even more now. So for the, let's say, following up coming quarters, I don't think Intel will improve this segment so much, but they have to hold the line at least here. Now the big, let's say, the ugly number here is the AI and the data center. No matter how you look at it, this used to be Intel's cash cow, and they're barely making any revenue, and basically they're giving away their chips for free just in order to stop the bleeding against AMD. And if you actually look at the data center for AMD, you can see here, according to Statista, AMD's basically been eating up, taking more and more market share. And with Zen 5 coming online very soon, the competition is going to be even tougher. So I don't expect this segment to do much better in this coming year. Sure, they are saying that the Xenon 6 lineup with the E-core is launching just now, which is, I think, Sierra Forest, which is like 144 or 288 small cores. But then you had also, 288, I think. And then the P-core. So remember that Intel segmented or divided their server lineup. So going forwards, they're going to have like some servers that are based on the E-core, where you will have more efficient, smaller cores, but you'll have many of them. And then they have the P core, which is the more, let's say, they're bigger and they're more powerful and more power hungry. So you'll obviously have less number of cores, but more powerful cores. But this is anyways how they decided to do it. So let's see if this strategy bears fruit in the coming years. But yeah, at least for this year, AMD is gonna be in a good place on the data center. So I expect AMD to increase the competition even more here with Zen 5 lineups. And yeah, so will Intel improve this situation on data center? Most likely not, at least not this year. And network and edge, you can see that it's kind of stagnating over the past few years and also on the past few quarters. And yeah, the gross margin is a bit better, so the margin is increasing a bit, but nothing to basically put your hopes on for Intel's possible, let's say, comeback. So that's for the first segment, for Intel's new business segment. Now let's go to the second one, which I mentioned in my previous earnings reaction for Intel, that this is where I think we have to see Intel's future. And if they're gonna succeed, they need to improve on this. And yeah, the jury is still out, and it's a bit difficult to actually know how many customers are they gonna be able to get to Intel's foundry business, which is very important to compete against TSMC. Now there is some, let's say, geopolitical importance to this business, so you might argue that in the Western world, especially in the United States and Europe, some of the companies might opt for Intel's option against TSMC just due to the geopolitical risk, especially due to the geopolitical situation on the planet right now. Even if, let's say, some companies like Microsoft might have better performance out of TSMC's manufactured chips, if it's like close enough, maybe you'll see that they start to choose Intel to some degree. I mean, still most likely no one will, leave TSMC's cutting edge state-of-the-art chips, but maybe instead of going 100% on TSMC, I don't know, maybe they give 10-15% to Intel, and that's going to be a good start for Intel. But that's difficult to say. I mean, all we hear now from Intel's management, Pat Gelsinger and so on, is that they're going to basically get customers, and they are getting customers. But this is something that's going to take time. So yeah, let's wait and see. But you can see that at the moment they are like bleeding a ton of money. I mean, revenue of 4.4 billion on the Intel foundry, but they're losing 2.5 billion. So this is like, how long are they gonna be able to continue this kind of bleeding? We don't know. But if they're gonna survive in the future, they need to basically make something out of this. As we mentioned, the previous segments are facing tough competition. Data center in the general purpose data center, so basically your CPUs for your data center. AMD is offering huge competition, and the AI, we don't even need to talk about it. Everyone knows that NVIDIA is just, they are a juggernaut on AI side. And whatever is left over from NVIDIA, AMD is doing quite well with their responsible MI300 and MI300A and X. So yeah, it's gonna be a difficult to if they fail on the foundry business, there's not a whole lot of other different segments to fall back on. Sure, it's the client computing segment. Yeah, that's gonna at least stabilize the bleeding a bit if they manage to improve with Arrow Lake and Lunar Lake and then Panther Lake next year for efficient mobile laptop CPUs. But yeah, let's see what happens. And then we'll see the others like Altera and Mobileye. I mean, they're doing good, but it's nothing to brag about. Then they gave the outlook for next quarter, so we know that at least whatever happens, next quarter is not going to be the one that's going to turn everything around. And we've been hearing from Intel's management, Pat Gelsinger, for the past 2 years that, this is the low point. This is the last quarter with bad numbers. And then next quarter, he'll say the same thing again. It's quite interesting that very few people questions him about that. He said literally the same thing if you look at the earnings reactions 2 years ago or 18 months ago. You can see that the good thing was again that the client computing, at least compared to last year, went up, and then the foundry business is bleeding. This is basically the takeaway. Now you can see that the client computing, so how are they able to increase their sales by this much? Well, we know that Intel recently launched the Lunar Lake, where late last year at least. With Lunar Lake, they are apparently targeting 40 million AI PCs. That's gonna obviously, you know, if you have 40 million, and let's assume, I don't know, let's assume $100 ASP. So $100 ASP times 40 million units, that's roughly $4 billion in revenue just from one chip, which is Lunar Lake. And if somehow Intel gonna stabilize the market and regain market share in the laptop next year with the follow-up to Lunar Lake, which is Panther Lake, maybe. And again, I'm not sure how much the ASP is for those kind of products. Probably a bit more than 100, I would say. So let's imagine Panther Lake is a bit higher end, together with Arrow Lake for consumer laptop products next year. Then maybe you could see additional 8 billion in revenue. So that's possible, and that's gonna definitely stop the bleeding. But that's not gonna take Intel stock, you know, to the heights of, let's say, AMD and Nvidia in that sense. What it's gonna do is basically stop bleeding like this kind of, you know, 11% reaction in the negative direction on earnings. So to summarize, I don't think it was the best earnings, but probably most people expected that, and also the outlook for Q2 is not good, but it sounds below the surface that maybe the second half of the year is gonna be better. And sure, they're not gonna have a whole lot of GPU sales in AI segment with their Gaudi 3, the updated Gaudi 3 chip, which they mentioned in the earnings quite a bit. And they mentioned that they're gonna have in excess of $500 million of revenue coming from the new Gaudi 3 chip. I mean, it's decent for Intel, but again, Nvidia is gonna sell in excess of 80 to 70 billion of AI GPUs this year. And even AMD, they mentioned 3 to 4 billion, but most people think that they're gonna be able to sell 6, 7, maybe 8 billion in AI GPUs. So those 500 million is sure, it's better than nothing, but it's probably not even taking care of the cost of the design of the chip. So I don't know, but at least let's say it's a good start. It could be worse. And those 500 million might not sound a lot, but remember that the data center for Intel is now as low as 3 billion a quarter, and even lower than that in the past few quarters sometimes. So an additional 500 million or 1 billion of data center AI GPU with much higher margin than the CPUs might help Intel to at least stabilize the bleeding on the data center, and then they're gonna have at least 2 good segments. And this is important because as long as the foundry is bleeding, you need to have this side, Intel products, doing well. So that's basically how Intel is doing right now, and you can see minus 12% or thereabouts. AMD is plus 1%, and their earnings reaction is gonna be in next week on Tuesday, I think. And we know for AMD's part that Samsung signed a $3 billion HBM memory supply for AMD. So it's good. I mean, if you sign 3 billion of HBM deal for AMD, imagine how much. Again, 3 billion is not the entire chip, right? So if you have your AI chip, you have your compute segment, and then you have your let's say the GPU, so GPU part of the chip, and then you have the memory. So if the memory is for 3 billion HBM 3E, AMD is gonna sell this for, I don't know, like 10 billion, 15 billion, I don't know, it's difficult to say, but I mean, I wouldn't be surprised if these 3 billion in memory is gonna result in 15 billion sales for AMD. So yeah, that's show you how high the bar is set, and this is again AMD, which is quite a distant second in that space. Nvidia is most likely gonna send 80 to 100 billion in revenue for AI chips next year in 2025, so if not this year already. So the competition is definitely there, but so let's see how it's gonna go. But that's gonna do it for today. And before I leave you, we have to look at the price update for the stock for Intel. You can see that a lot of them have cut the price from let's say mid 30s to low 40s, and then closer to mid and low 30s. So it's not looking good. But to finalize this video, I think actually I've been like for the past 18 months waiting for a moment to maybe look into Intel as an investment, and I believe like this is the year that we'll figure out the answer to that, if it's a good choice to go into Intel now or in the coming 6 months, or if it's gonna be even, let's say, more downhill from here. But I think like if they manage to perform and if they manage to show let's say the foundry business is doing good, we know that the Lunar Lake and some of their Sierra Forest product, which is the Lunar Lake is the mobile laptop APU. Sierra Forest is the E-core, so the small efficient core server CPU, and then they have the Granite Rapids, and yeah, so that one is gonna be the more powerful CPU for servers. If the process node behind those products are competitive to TSMC, and they don't need to be better, but they need to be somewhat competitive. If that's the case, then I believe this might be a good opportunity to go in there. But again, how do we know that? And we have to assume that since the past 6, 7, 8 years where Intel promised so much, how do we trust them to perform this time? I don't know. But there is a scenario where this could be the time to actually start to look at Intel as a good investment, because the market cap is nothing, the market cap is 135 billion, and probably remove 10% from today's crash, it's probably close to 120 billion, and that's really nothing compared to a lot of the semiconductor market. So let's have a look at Nvidia. So you'll see that Nvidia's market capitalization is 2.1 trillion. So right now, Intel literally is 15 to 20 times smaller than Nvidia on market capitalization. And that's scary, but it also leaves a possibility for Intel to really grow into this. So that's gonna do it for today, and thank you for watching, and see you in the next one.